I think at this point it's quite obvious the Fed made a mistake. We are on the other side of a mountain of policy error, and they have been fairly reluctant to admit it. The good news is it seems like there might be a few cracks in the armor of the Fed, and they may start relenting their policy. I had noticed in the Fed funds futures that all this bluster of 4 rate hikes this year, the probability of the Fed moving, I believe, is like 9% for the entire year. So, not good. The economic data has come in terribly. We've had very weak GDP. We've had pretty crappy jobs numbers. I've gone through how the media likes to say they're good, but they're not. We're going to get another reading of that. I think we get the ADP in the morning, and then we get the NFP, the non-farm payroll, on Friday. So that should be a pretty important number. The ISM today, the service ISM, was atrocious, really, really weak, very close to recessionary. Same, we've had bad durable goods orders. We know about Boeing. They cut half their production of their 747s. And all I ever hear about when I turn on the TV is all these big companies, the oil and gas companies, even some tech companies. They're firing tons of people. Yahoo fired 15% of their staff. BP is doing mass layoffs. Chevron is doing mass layoffs. All of these companies will fire and fire and fire and cut back production and their R&D and their spending to preserve their dividends and to do share buybacks. That's just how it is. Whether you like it or not, that's just how it is. And the economy is weakening. That being said, once the Fed signaled their change in policy, their rate hike, rates have done nothing but go down. And they broke 2% yesterday, and that is, I believe, why you saw the extended weakness from yesterday into today, that the interest rates, I've said for a while that interest rates lower are good for PE stock multiples. The problem is when they go so precipitously lower so quickly, it's sort of the way to get there, people think it's going to be a recession. And that's why the market has responded poorly to lower interest rates. We all know there is one key factor that matters to the market here more than any, and that is oil. That is what the algorithmic traders who move futures are keying off of, and that is at any given point in time, usually at the extremes. I don't know if most people remember this, but oil was linked to the S&P at the top. Maybe it's getting linked to it at its lows here. So you had a atrocious number with regard to oil and the inventory build, and after a move down, we closed up huge. It was very odd to me all day long when the futures were weak, and I know everyone was talking about this nonsense of decoupling that was definitely not going to be the case yet. But I believe I believe that the numbers are finally bad enough that the Fed might be paying attention. I don't know if we are at the level, their kind of uncle point, meaning that they'll reverse policy, but I don't think that they're going to step in it any further, if that makes sense. I think that it will take more for them to reverse. But I also don't believe that, I do believe that we've hit their point where they're not going to make it worse. I hope. That would be a catastrophe for the U.S. economy, as well as the stock market. So we had a bit of a rally in the overnight session. So inventory came in long, and you had a very early, quick liquidation break, and it was like all single prints down. And on the lows today, in the ES, that is, which was 1865, you had about 6.5 points worth of single print excess on the lows. The market was able to rally up. It basically was overlapping to down value, so believe it or not, even with the reversal, I would still construe today as bearish. VWAP is lower than the prior days. If you get confused ever and you don't know whether to construe a day as bearish or bullish, you want to often look at the VWAP and see where that is. That's the volume weighted average price. If you added up the volume at every price of every stock traded today and every level of the futures, that is the VWAP. That was closed around 1890, so we had a bit of a rich close. So the close was a little bit for everybody. I was actually sort of looking to see, and I've said this before, that, hold on one sec, that the ES, first of all, needed to close over 1910. Why 1910? That is the Fed day from 127, their high of day. I often talk about trading against the Fed range, and 1910 was the ES high of day, and we stopped just shy of there by the close. We did have a bit of a look above there. It was interesting. The value area high today was 1909.75, and the Fed day high of day was 1910. I think you just had a lot of responsive right or right out type of sellers there. And after having moved so far so fast, I think it was just a lot of end of the day profit taking. So that being said, this is a game of inches. We did close below 1910, so you can't sound the all clear on today's rally. I will say that the fact that the VIX was able to close slightly negative below 22 is good. That's 2 days now, back to back of closes below 22, albeit just a little bit. You need to see 20 break now for the rally to really continue and have confidence. If you start holding 22 and getting back up to 25, things are going to get squirrely again. So that's it. If we're talking in SPY terms, let me pull up that chart. The Fed day key that day, the high of the day was 193.88, and the low of day was 189.88. I'm talking about that was from 120. That's 129. That was the breakout range. The Fed day range from that day, I'm sorry, it was a mistake, was 187.06 to 191.56. I knew I was looking at the wrong day there. And then we had this breakout candle. So I really believe that you need to kind of hold over that breakout. And we weren't able to hold over it into that body. We gave up a little bit too much of the rally day body, and we closed really rather. We closed kind of mid-range there. We did wind up today being able to close over the 20 MA, but I don't feel that it was convincing enough in my view to say that the all clear is sound. If we can get back over, let's say, today's high of day, then I think we have continuation higher in the SPY. With regard to IWM, someone had asked about that. That is still showing a lot of relative weakness. I think it did sort of close. It's still within the context of the breakout day body. If you start getting below 99.96 again and closing below there, I think that it's going to get a little squeamish to the downside, and we'll probably want to retest the 98s, maybe even the 95s. It's interesting where the rally stopped. It's hard to... one of the problems with Periscope is that I can't show you the charts. But if you were to draw an up channel, the up channel broke on 113. The rally back from 129 stopped right at the back side of that channel the next day also, and then it has rejected. So often what you'll have happen, you'll have the initial break, the check back, and either a break lower or a move back up higher. This so far is a move lower off the check back, so the IWM is still signaling a lot of weakness. The Qs have been kind of holding in there. You had some pretty good earnings from Facebook and Google and Amazon. The problem is they've run up a lot. Google basically stalled at its channel high. Someone asked me in text message today why Google was down, and my answer to them was this, and this is really the right answer, and I know a lot of people are going to argue this, but this is how technicals work in the stock market. Google had an after-hours high. Let me pull up the Google chart. This is sort of a I don't even know the right word to use. Trade school on how to trade momentum stocks. Let me just pull up. I need more than a 1 day. I need a 3. Let's do 3-day, 15-minute. Perfect. So here's the deal. Google had a spike up high. It was 843. It opened the next day not above there. That's your first warning. Number 2, it opened well below. The high of the rally that it got up to was 810.35, and the low of the opening 15-minute bar was 789.33. The high of that opening bar was 804.5. So anything above 804.5 would be considered relatively okay, but once you took out that low, the 789.33, considering the regular hours trading high of day was below the after hours high of day, and you took out the 15-minute low, after that it was just kind of goodnight Gracie and it was lights out. And you basically have a gap, having a gap fill. Just pull up the 9-month. You had the gap fill and more, and you're kind of just hanging out above the uptrend within the up channel. The bad news is that we stalled just high of the up channel. There was like a little bit more room there to maybe the 813s. The bad news is that the channel low currently, if it were to happen tomorrow, and I'm not saying it will, I don't think it will, is roughly around 600. So it wouldn't shock me. I know this is going to be high treason. It would not shock me to see Google come back down and either get the channel low or get close to it. So I'd be really, really careful with Google. It closed today below the 50-day moving average. If you want to kind of, I mean, if you're already long and you're sort of smoking the hopium here, you really should not. I think you could actually shoot short rallies on the way up, any bounces, as long as you don't start getting more than half of today's decline back. That's my theory on Google. Amazon was another case of what, it had come down a lot. Unfortunately, it had just missed the check back to the 61.8. It got close. It basically, from there, took off. And it took off on Facebook earnings, a lot of it. You stalled just shy of a declining 50 MA, and now you've taken back the swing low from that rally. So once you broke 747.18, the chart pattern has now officially changed from higher lows to higher highs to lower highs and lower lows. So Amazon is probably going to be in for a little bit more rough sledding in my view. Primary trend is just a little bit below there. We stopped on a channel low today. Like if you draw a descending channel, that's what I have drawn in. But it stopped just short of the primary trend line, which today would have been 5.10. So the good news is the longer this goes on, the higher the channel moves up. But I believe put ratios would be good. I see a reference low down at 490.5. So I wouldn't mind being, I guess, long down there for some type of a bounce. I believe I did I forget I did the exact math earlier, but I believe that roughly is a measured move low. Like if you take the 696.40 swing high, project it down to 547.88, and then take that dollar amount and subtract it from the 638.06, you roughly get down there. I think almost to the T. So I think if you want to do put ratios, you want to be long some puts and then short two times as many down at around that level. Near dated, I would do same week, expiring this week, next week at like the latest. So that's my point. Yes, you missed Google. If you want to watch the rebroadcast, you can see it shortly. It will be up on my YouTube channel. It was quite extensive, actually. Let's do Facebook. So everyone knows, I think everyone in the English-speaking world knows that I've been bullish on Facebook. I had projected some 1.618 Fibonacci extensions, and some people, I had talked about one of them being at 109.28. The last go-round, it wound up being a very prescient sell. I told people that this one was 116.07. It got to 117.59, but I think that a lot of people were not listening. They were being a little greedy. It's interesting, but that's just kind of how it is. The good and bad news for Facebook. The good news is that I think it is likely in for more pullback. Well, I guess that would be the bad news if you're long, but it's the good news if you're looking to re-enter. So anything below 113.20, that's the earnings gap kind of reversal high of day. I think people are going to kind of shoot against short. The bad news is I mean, today it got down almost to the kind of the breakout, which was 109.20. I'm sorry, that was the old fib number. That wasn't really the breakout. The breakout was 110.65. Anywhere between there and, I don't know, the 108.74. That area is roughly the breakout. We tested into there, responded back up. If you look at my weekend review video, I discussed the progression line of Facebook, and anytime you get above there, prices get unsustainable, and this time was no different. Don't be a greedy pig. It's up still huge. Book some profits. I always talk about trim, trail, and hedge. I don't just say that, for my health. I do that because I want to lock in profits, and I want people to be safe. Anyway, that being said, I unfortunately think we're going to do another one of these sideways consolidation patterns that may eventually result with a lower break. I think you can do strangles right now in Facebook with relative safety in the near term. I like put ratios on down moves. You have to wait for a down move, though, for the IV to pop. But a 50 MA, it would probably be a good target. It's currently around 103. There's some reference support down there. It is below the earnings gap high of day, but I suspect that 50 will be moving up. It's bending back up here. So that's my theory with Facebook. Let's get into some of these other stocks here. So some of them, these are not ones I always follow, but hell, I'll wing it. PayPal did fairly well. The opposite of eBay. It looks like it has a triple bottom in place. It is now into sort of a range high, so I wouldn't be chasing it here. I'd actually be looking at book some profits. You probably could rebuy it against the 50 MA, somewhere in that area. That is, or if you want to play some put ratios, that to me would be the logical play. Alkermes, this is one I've been watching very carefully. It looks like it's trying to bottom, but it's not really doing it so convincingly. I think that the IBB weakness has caused this issue. It is starting to make some higher lows. Today was a bit of a weird day. It was a bit of an outside day. I think if you want to play long, if you have to do it right here, you can play long against today's low. But I've been looking for a true test of the trend line. It stopped just short of there. That's in the 25s. We bottomed kind of in the 29s. There's a big gap fill around 25.60. My guess, if I had to use my experience about how stock prices react, we're probably going to rally from here and eventually come back and retest this area again at some point. So it's probably going to be a move higher before lower. Honestly, I'd prefer if it just did the lower and got it over with, but it's probably going to be, in my guesstimate, a move higher before lower. FXE. Let's take a look at this chart. I'm not on a long enough time frame. Yeah, the euro looks like it's trying to bottom, believe it or not. You're seeing higher lows. You had a big consolidation pattern. Today was a big breakout of range. You have higher lows and higher highs. As long as you see that pattern, you can stay long. If that pattern breaks, GTFO. Wow, that is some protracted move down. It's just amazing. It really pisses me off. I was at a friend's wedding last summer in Capri in Italy, and the euro at that time was like just peaking at $1.40. Man, do I wish that wedding was this summer. It was the previous summer, not this summer. I wish it was. That would have been so much cheaper, that trip. So just connect some of these lows here. You could draw on a trend line. You could even draw on a channel. Maybe I'll show this in the weekend review. We'll see how much time I have and how much I have to cover. There looks like there's some room up to 110. There's a big gap fill close to up there, around 111. So it's probably going to chug up there, is my guess at some point, assuming this dollar stays weaker. The dollar today got slammed on that junky ISM. We're getting a little bit close to mid-range, though. The good news here, actually, is we are now making lower highs and lower lows on this move, actually. So we may have a little short-term peak in the dollar, where we really have to see. It still is. Today was the close was above. Hold on. Oh wow. Oh wow. If you go back and look at my weekend review video, I talk about the breakout being 25.23, and that was the close on the dime to the penny today. These levels, they just work, man. They just work. So as long as we hold over 25.23 and we close right there, there's still some hope for the dollar to still make all-time highs. If it loses there, the pattern remains into the bearish correction mode. That's very key. If the dollar can start going lower, a lot of companies, even like Royal Caribbean the other day, cited the high dollar as problems for forecasts for future earnings. You really need to see the dollar calm down. It's really important. We talked about Amazon. We talked about Facebook. We talked about Google. Oil. Oil is like the Mac Daddy, right? It's sort of what everything keys off of these days. Stocks, bonds, everything. So you had what's known today as an outside day in oil, and man, was it a wicked one. You have a lot of these big whippy moves down here, and that's actually really encouraging to me, because tops and bottoms are usually formed when price action gets whippy, like up and down a lot within a range. So this is a slightly higher low than the last swing low. You really need to see the CL take out the 3482 level. You also have a declining 50 MA. I think that eventually is going to get touched. We close above the 20 today. I believe, like I've said this, it may want to test lower. We'll see, but I believe oil is kind of trying to bottom. We'll see how that goes. The VIX. So the VIX is starting today. There looks like we've had a couple of spikes, right, in the VIX. Today it wound up closing a little bit weaker than yesterday. It's still holding the 50 MA. You really need to see that 50 snap. Let's just keep it simple, stupid. You need to see 20 break now for the rally to really get going in earnest. If you kind of still can hold on to 22s, it's trouble. It's good that we've closed below it the last 2 days. If you start getting back above 25, it's going to get quite skittish to the downside. Netflix. So I've been bearish on it. Today looks like you put in a little bit of excess. It just missed the 85 half. It had a lot of excess to the downside. I would say if you want to the candle today still closed negative. I would have liked to have seen, like, if today's candle closed at the high of day, I probably would have went home long Netflix. You can probably play it tomorrow over today's high of day long for a bounce. I will say this, though. Anything below 93.55 still remains vulnerable. If you get below 90.11 again, that was the prior swing low before this sort of bounce, it's probably going to be trouble, because that would take you below today's body. Well, not quite below today's body, but you would take below the last swing low, and I would think that it probably would resume its move a bit lower. Auto stocks. Someone asked about Ford. I believe we are experiencing peak autos, and that's why these stocks can't get out of their way. We have a weakening economy. You have. I mean, I've never liked these autos. I hate to say this, but American car companies are not making really quality products. You can get German cars that are maybe minorly more expensive. Even some of them now are cheaper, and they're better. I mean, you go around the city here, and I live in New York City. People drive Mercedes, BMWs, Audis. Those are kind of the cars people want to drive. I really think that, and I had said this, I wasn't broadcasting then, but I had talked about this back when, during the financial crisis. The big mistake the auto companies didn't do, what they should have done back then was kind of focused on building themselves more into a luxury brand. And what they could have done was appeal to a lot of celebrities' patriotism and started rebuilding like the Cadillac brand and a few of these old school brands. They missed that opportunity, so now they're kind of just with the ebbs and flows of the economy. They're not it's sort of commoditized, the U.S. autos. So they're basically trading like a commodity, in my view, and they are trading like we are at peak autos. Ford, when it gets back into single digits, you probably could scoop some up. I've never been a huge fan of these stocks, though. I will say this, on the stream, I remember a while back, and I know this sounds terrible, but I went right when the GM, when GM came public again, I said, how long is it going to take for them to need their next bailout? So that should just give you an idea about how bullish or bearish I am on these companies. And I don't necessarily know that that's going to happen right away, but the stocks have not been trading that well, despite good numbers. If you're ignoring price action, do it at your own peril. Banks are not trading well. Someone asked about JP Morgan. They are obviously the premier brand bank. I think the problem for JPM, and just want to see something here. I think the problem for JPM, and I think the problem for all of these banks, is that they've been regulated to the point of, I don't want to say neutered, but I do want to say neutered. They can't do what they used to do. Their earnings profiles aren't what they once were. And I think that until they can get a steeper yield curve, and we all know that rates have been plummeting, right? They haven't been rallying, that there is going to be trouble. It's going to be hard for these companies to kind of make their daily bread. What I was just doing was looking to see where the 1.618 fib extension was from the 2007 peak, to the March 09 low. We didn't quite get there. It would have been 76.91. JPM is still above the downtrend from those days. It looks like it retested on the flash crash the 50-month moving average. That is risen now to 53.66. So you really need to see it hold that level on this sort of test back. The problem is you're starting to make you're coming off lower highs and starting to make some lower lows. So I would just be a little bit careful with JPM. I do think that there's also some contagion fear. By the way, if it got to primary trend, that would be close to $50. It's like in the 49s. So that's where I would probably be interested in trying some type of a right or right out. There was a big consolidation and a breakout between the 47s and the 48s, 49s. Hold on, I just want to look at what was this high. 48.20. If it starts getting into that area and it coincides with trend, I would be interested in a right or right out situation. That's my opinion. I think there's a lot of fear, though, because of the European banks like Deutsche Bank and Credit Suisse. I mean, Deutsche Bank is trading like it's going to zero. They have a huge derivative book. I've been talking about this for weeks. I'm starting to see it. I haven't seen the ticker in the corner yet, but that is probably coming. I did a survey the other day of where people thought this was going to go, below 10, below 5. Most people thought below 10 and below 5. So I don't know if that just means sentiment is overdone or if it's really going to go there. I tend to think it could. I know it sounds crazy, But I don't think Deutsche Bank is going to be allowed to go, but I don't think the equity is going to be in good shape. I do think it could rally back to as much as maybe 21. That would be an amazing right out short opportunity if there's some type of rumors. But the stock really looks like it's looks like it's in a death spiral to me. Exxon? Someone asked about Exxon. Did somebody say Exxon? Yeah, I actually took some Exxon off today. I had been short puts, and just based on the risk-reward profile and the duration, I closed some of them. But I do like the pattern. Today was it wasn't quite an outside day, but you are above the regression line a little bit. You took out multiple days of trade here. I think you can play by the dips in Exxon. It's my favorite of the oils. It's actually one of my favorite stocks of all time. I think you can buy Exxon whenever it has a higher yield. They have an impenetrable balance sheet, and they are going to be really the big winners of this whole oil fiasco when it's all said and done. If you want to get long at cheaper prices, I like put ratios, and I think that you can play it that way. Someone just typed that they were talking about a different company. I thought they were talking about Exxon. Just with regard to Exxon, you're coming into the kind of the upper end of a resistance range here, so you probably want to buy this in the low 70s and then sell it like in the high 70s or the low 80s. In Trexon, this is not a company. Someone had typed that. I had seen it that way, but I thought they meant Exxon Mobil. This isn't really a company I follow all that often, but I will tell you this. You have a potential to set up an inverse head and shoulders here. We're going to have to see how that plays out. You do have a break. I mean, the stock has been making lower highs and lower lows for forever. You now have a snap of trend line, which to me says that it has potential. Maybe it has bottomed. I think you have two hammers the last 2 days, so I think you could just use those lows as your reference. If you're long, those are your stops. If you're not in the trade yet, if it breaks over 32.67, and you're basically coming up, you're first starting to reverse the pattern here. You have some higher lows and higher highs. It's in a consolidation area. You really need to see it break this 32.67. If you start losing the 2-day lows in the 29.29, then you want to be a GTFO or maybe even short. That is XON. Priceline, Vicus virus. People are terrified of this Vicus. I have to tell you, I was out to dinner with my attorney and friend last night. We were real fancy at the private dining room, and we were talking about his vacation. He was actually going to go to a place that I had just been last year, actually last time around this year, and I was telling him, he just said that him and his wife canceled their trip because they were afraid of getting Vicus virus. So that really struck me as the fear is real. People are canceling trips. So that's probably why Priceline has been suffering. They do have earnings coming up. I really am not happy that it has a couple of hammers down here. It is below trend, just so you know. It did have a check back to trend 2 days ago and failed and came back down. It has, however, not made a lower low. I was sort of hoping it was going to get the 990.69 reference low before their earnings. So it hasn't quite gotten there. If it got it now, I don't know if I would really want it because we've consolidated too close to there. So, the stock is bombed out. I have to tell you, if I was going to play this stock, let me just see something. Did Expedia report yet? I just want to see how they did. Expedia is 210, and Priceline is on, don't tell me 210. What is Priceline? On 217. So let's wait until Expedia and see how they do, and then we can extrapolate. If Priceline gets nailed on Expedia down terribly, you could play by the dip. If Priceline rallies hard on Expedia into their earnings, it'll probably set up for a short. I've seen this play out many times with this stock, again and again and again. That's how I'll probably be playing it. I wish they would split this damn stock already. It's ridiculous. It's too expensive. It's kind of hard to trade stocks like this in any real size. This is definitely big wave riding, not for the faint of heart. The expected move, just so you know, for Priceline earnings. Holy cow. The 16-day, if you go out to February, the whole month, it's expecting a $97.67 move, so you'll probably get a $100 move on earnings. So we could have something pretty special set up there. Tesla. Let's talk a little Tesla. So this is the curious case of a head fake. You had this downgrade from Morgan Stanley, and the stock basically opened. Let me just take a look at the daily intraday. Sorry, 3-day, 15-minute. So you basically opened on the lows. You had hammers on the 15-minute chart from the pre-market. No, those are RTH. Right off of a 61.8, a retracement apparently I have drawn in. I don't know if it's that can't be. Hold on. 9-month daily. We'll get there. One sec. Yeah, that was a 61.8 fib retracement. Wow. I hadn't realized that at the time. And it was also basically 100% retracement of the entire rally. And of course that bounced. On a downgrade, it opened there and it did nothing but rally. The problem is that you've taken out that low now and gone lower. So you're going to have, what was support becomes resistance. This 183 to 181 is probably going to be some resistance now. If you go, I'm just going to look on a 3-year chart. It's a lot lower. 153s could be, is the 78.6. You also have a 200-week MA down there at 156. Let me just get a little bit closer term. I want to be on a weekly. No, 3-year. Let's get a 3-year on there. Yeah, you've snapped the primary trend a while back. It hasn't had a check back, so that is good. Usually you want to see a check back, but you have broken the last swing low between the double tops. That was the 183.81. The bad news is when you break the swing low between double tops, it means the stock is pretty much over. It's peaked. So you probably, unfortunately, if this can rally back up to like 204, 205, you might want to start thinking about playing some, short there. That was the real breakdown for this last leg, although it looks like that had the check back. If you do a 100% retracement from the big run-up to the pullback low to the new run-up, it's like 116. I don't know if the stock's going that low, but I'll tell you this. Cheap gas and cheap oil have not been helping this stock. The best thing that could happen to me if I were playing this, they report on 210. So the best thing that could happen is that this thing sells off in a straight line for a week, and then it sets up for a relief rally bounce. But unfortunately, the stock looks like it is going lower. I think we've covered a lot here. I'm going to end on GoPro. GoPro. They reported, apparently their numbers were okay, but they have a CFO that is leaving. Wow, that's pretty bad. When the CFO is leaving, that always is a sell. The stock got $8.50 in the after hours low. It seems to be trying to rebound here into the 9s. I saw someone just said their guidance was awful. I'm sure it was. This feels like a sandbag that they were just going to put everything into this and get all the bad news out. I have to tell you this. I've said for a long time I thought this stock would be a single-digit stock. It has proven itself to be. I don't like the CEO. I didn't like what he'd pulled with unlocking the shares after the IPO for his charity or whatever. That just rubbed me wrong. You don't do that, and the stock has been a disaster ever since. I know they have a lot of new products coming out. Their drones and some new cameras. I was looking on their website the other day because they said that they announced that you could use the camera with Periscope. And I was like, oh, maybe I'll buy a GoPro, right? I don't have to use my iPhone for this anymore. I could just use the GoPro. And I went on the website, and I'm like, I'm not spending $500 or $600 on this thing. I'm like, what, are you kidding me? I was like, $89 I'd spend for that thing. You go into a store and you get one of those point-and-shoot cannons for like $89 to maybe $130. So who the hell is paying that for a GoPro? Yeah, it's ridiculous. They're way too expensive. I noticed that they have these little cubes, and I noticed there are some apparatus to screw them into things. But I just think it's too expensive, and I just don't see those margins improving. I guess they have a brand or whatever, but to me, I just don't see the what's to prevent them from being commoditized. I mean, it's a sports action camera for crying out loud. I just don't see it. Here's the problem also. There's something called TAM, Total Addressable Market, and I just don't know that many people who jump out of planes and off bridges and ride their bikes down straight mountains and either one, live to buy a new one, or two, need to buy a new one. Like, why would you ever need to, what's the upgrade cycle? It's not subsidized. It's not like an iPhone where every 2 years you get a subsidy, and even those are supposedly going away now. But it's not like it's subsidized and you get a new get a new camera every 2 years. So my guess is that every dentist who uses them to record YouTube videos and every guy who wants to, like I said, jump out of planes has probably already bought one. I just don't see the compelling reason to buy it. The only way they're going to start really selling these things mass market, and even then, who buys a camera? I mean, I use my iPhone. Apple is doing a huge new ad campaign, and it's basically all about the camera. And they're going to show these beautiful pictures that were taken on the iPhone camera. And I have the iPhone 6, and I'm going to get the 7 soon. And I know friends of mine who have the 6S, and the camera just gets better and better. So who the hell is buying GoPro? I mean, who the hell are buying these things? They're crap. It's crap. You have a crappy CEO. You have a CFO who's leaving. I just don't see the appeal of GoPro. Like I did say, though, that there is a product cycle coming up. There'll probably be some, people who were excited about this. These are all the same people who've been excited the entire way. Maybe they'll double up to catch up. I think if you want to play long here, you have to use 8.5 as your stop. I think you could trade against that low. That was the after-hours low here. If it breaks 8.5, you could short it, believe it or not. Even down here, stocks can go to zero. You'd have... Someone says, oh, you break 8.5, how low can it go? Well, the answer is zero. You could have $8.50 on the downside. Yet another $8.50. But I think the stock is just to stay away from here. I just don't, like I gave the litany of reasons. I do think that they're going to come out with the drones. I think that's going to get people excited. You'll probably have the stock have some type of a rally. And the great news is that it'll be an amazing opportunity to short it again. That is my view on it. So we'll end on that. Not that I have any strong opinion about GoPro or, I was right the entire way down from almost 100, but that's a whole other story. Anyway, guys, it was really a pleasure talking with you. Keep in mind the Fed day range and the breakout day range. You want to be long over that. You want to be short below that. Real simple. 1910, 1911. That dollar range, if you get above there, the rally will continue. You get back up below there, it's a real issue. Anyway, that's my story. I'm sticking to it. If you guys haven't, if you came late, I saw someone said that they wanted to hear the Google analysis. Just go on my YouTube channel. I'll put this up right now. I'm going to upload it. It should be up there soon. You can watch the rebroadcast. And be sure to subscribe to that YouTube channel and to follow me on Twitter @Justin Pulitzer. Anyhow, let's have a good one, and cheers.